you hear the price of oil on the news, it sounds so simple, right? Like it's just one single number. But the truth is, it's way more complicated. It's not about one price. It's really a tale of two different oils that basically run our global economy. Okay, let's get into it.
And that brings us to the big question right off the bat. I mean, if oil is this global thing that everyone needs, why isn't there just one single price for it? How come we're always hearing about different prices for what seems like the same stuff?
Well, the whole thing really hinges on two names you've probably heard tossed around, WTI and Brent. And these aren't just labels for oil. They're the giant benchmarks that pretty much the entire world's oil market is priced against.
So, let's meet the main players here. Think of these two as the heavyweights, the global standards that everything, and I mean everything else, is measured against.
Okay, so on one side, you've got West Texas Intermediate, or WTI for short. That's the big one for the United States. But on the other side, you've got Brent Crude, and this one's the true global titan. It's used to price something like 2/3 of all the crude oil contracts on the planet. And here's a fun little fact for you. Where does the name Brent even come from? It's not a person, it's not a place, it's a bird. Yep, a Brent goose. Turns out, Shell had this policy of naming its oil fields after birds when they were drilling in the North Sea. Kind of random, right?
All right, so they've got different names, they rule different parts of the world, but what actually makes them different from each other? Well, it all boils down to two things: what they're made of and, crucially, where they come from.
So before we compare them, we got to talk about what the industry calls the gold standard, light sweet crude. This is the stuff that refineries absolutely love. Light just means it's not very dense, so it flows easily. And sweet, which, trust me, has nothing to do with taste, means it's got very little sulfur in it. Both of those things make it way easier and cheaper to turn into stuff like gasoline.
And this chart here shows you the difference perfectly. If you look at the specs, WTI is technically the higher quality stuff. It's very sweet because it has less sulfur, and it's very light because of its density. Brent is still fantastic oil, don't get me wrong, but it's just a little bit heavier and not quite as sweet. So on paper, you'd think WTI should always be more expensive, right?
Well, that's where geography comes in and totally changes the game. See, WTI comes from oil fields deep inside the U.S., and its main hub is a town called Cushing, Oklahoma. The problem? It's completely landlocked. Getting that oil to a port to ship it overseas is a huge, expensive headache. Brent, on the other hand, is literally pumped out of the North Sea. It's basically born on the water, so it's super easy and cheap to load onto a tanker and send it anywhere in the world. That logistical advantage is absolutely huge.
So what happens when you have the better oil that's hard to move and a slightly lower quality oil that can travel the world easily? You get what traders are obsessed with, the famous Brent-WTI spread. It's that price gap between the two that tells us so much about what's happening in the world.
And that price gap is anything but stable. Global events can just blow it wide open. Look at 2011. Tensions in the Middle East made seaborne Brent way more valuable, and its price shot up to a staggering $25 more than WTI. Then in 2018, pipeline jams in the US basically trapped WTI, and the gap widened again. And of course, more recently, things like price wars and the war in Ukraine have caused just massive volatility. It really shows you how sensitive this whole thing is. Okay, so let's zoom out a bit, because this really brings us to the bigger picture. The price of oil isn't just about the physical stuff in the barrel. It's about these massive global forces, from political deals all the way to the financial markets. First up, you've got OPEC+. This is this huge alliance of oil-producing countries, and they basically get together and decide how much oil to pump. When they turn the taps up or down, it sends shockwaves through the market, and it often hits the price of the globally traded Brent a lot harder than the more domestic WTI.
Geopolitics also means actual physical places on a map, choke points, and none is more important than this one right here, the Strait of Hormuz. An insane amount of the world's oil has to pass through this one tiny little shipping lane every single day.
And we're not just talking about raw crude oil here. About 5 million barrels of refined stuff, think gasoline, diesel, also have to squeeze through the strait every day. So if there's any disruption here, it doesn't just affect the price of crude, it hits the price of everything, all the way down to your local gas station.
The risk goes beyond oil, too. Just look at this chart. Big economies like China, India, and Taiwan depend heavily on natural gas coming through that same strait. So you can imagine any kind of blockage there would cause the price of seaborne oil like Brent to just skyrocket, while landlocked WTI might be more protected, completely changing that price gap we've been talking about.
But maybe the biggest force of all,
the one that really keeps traders up at night, isn't physical at all. Beyond the barrels in the tankers, there is the massive, powerful paper market.
The paper market is basically where Wall Street meets the oil field. It's where investors buy and sell things like futures contracts, which are pretty much just bets on where the price of oil is going to be in the future. And what's crazy is that sometimes the speculation and the general mood in this financial market can have a bigger, faster impact on the price than the actual physical supply and demand in the real world.
So, we've covered quality, location, geopolitics, high finance, the whole shebang. But what does any of this actually mean for you? Why should you even care about the difference between WTI and Brent?
Well, at the end of the day, it's pretty simple. These two benchmarks are the starting point for the price of almost all the fuel that powers our lives. When their prices bounce around, it directly affects what you pay for gas. They're also like a real-time report card on the health of the global economy and the level of international tension. So understanding them helps you actually make sense of what you're hearing in the financial news every day.
Which leaves us with one last big thought. For decades, WTI and Brent have been the main characters in the story of global energy. But as we look to a future of new technologies, new energy sources, and shifting alliances, you have to wonder, what does oil's next chapter look like?